Dear students, today we are going to discuss about budget for housekeeping. Definition: a budget is a plan which projects both the revenues that hotel anticipates during the period covered by the budget and the expenses required to generate the anticipated revenues. Budgetary control. The advantage in preparing a budget is that it provides an opportunity for taking a critical look at the costs of the department, reviewing past planning and present accomplishments, and then taking appropriate steps to accomplish more in the coming financial years. The executive housekeeper's responsibility in the budgetary process is twofold. First, the executive housekeeper is involved in the planning process that leads to the formulation of the budget. This entails informing the rooms division manager and general manager what expenses the housekeeping department will incur in light of forecasted room sales. Second, since the budget represents an operational plan for the year, the executive housekeeper ensures that the department's actual expenses are in line with the budgeted costs and with the actual occupancy levels. Budget, as a guide. By comparing actual expenses with allocated amounts, the executive housekeeper can track the efficiency of housekeeping operations and monitor the department's ability to keep its expenses within the prescribed limits. Budgets provide a financial framework within which the housekeeping department operates. Thus, budgets should be carefully prepared and used to govern the department's spending. The budget also acts as a guide as to which things need repair or replacement. It helps to determine what valuable pieces of equipment may be purchased and to pinpoint the areas where emphasis will be placed in the coming year. It can be said that the budget is an instrument used by the management for controlling and directing activities, especially purchasing activities. Preparation of the budget. A budget should not be prepared at the last minute. Standard forms are usually issued to each department head for completion and a deadline date is set for submission. Discussions should have previously taken place between the general manager and the other department heads in order that they are aware of future company objectives which may be reflected in the budgets. Past records and previous budgets may be used as a basis for the new budget, taking into account inflation, a general increase in prices and fall in the purchasing value of money. The housekeeper must also consider any changes in company purchasing policy. She should also be aware of new technology and better products which have appeared. When the budget forms have been completed and competitive prices obtained, the forms are usually forwarded to the financial controller in order that the costing may be evaluated against the forecasted profit of the establishment. Discussions take place. This is usually the time when the housekeeping has to state her case regarding the necessity of specific budget items. It is common practice to overestimate budget requirements in order that when any cutbacks are made the department head still ends up with sufficient funds to meet the department's needs. Under or overspending on the budget may have serious consequences for the department head responsible. When a budget is underspent, ideally the money saved should be allocated to a contingency fund for future projects or emergencies rather than being spent on unnecessary items. When a budget is overspent, the situation is usually more serious. The housekeeping department will have to submit a report accounting for the reasons why the budget is overspent. In some establishments it is regarded as a serious offense. Overspending may be carried forward to next year's budget so that less money is available next year. On the other hand, the establishment may realize that insufficient funds were allocated to the housekeeping department and thus extra funds may be given next year. Types of housekeeping budgets. Categorized by the types of expenditure. Budget can be classified by three types: capital budget, operational budget, pre-opening budget. Capital budget, CAPEX. It is an intended expenditure on assets that are not used up in the normal course of operations. They have a lifespan that exceeds a single year. Examples: furniture, equipment, room attendance cart, vacuum cleaners, carpet shampoo machines and laundry equipment. The hotel building itself is also a capital asset. Operational budget, OPEX. It is an intended expenditure of items of daily or short-term consumption, that is, those costs that the hotel incurs in order to generate revenue in the normal course of doing business. In the housekeeping department, the most important and expensive operational cost involves salaries and wages. The cost of non-recycled inventory items, such as cleaning and guest supplies, are also considered operational costs. Pre-opening budget. It is an intended expenditure of allocation of the resources for opening parties, advertising, initial generation of goodwill, liaisons, and public relation. It also includes the initial cost of employee salaries and wages, as well as amenities, supplies, and other day-to-day useful items like cutlery, crockery, and so on. Budget planning process. The room division budget planning process depends on two main factors: forecasted room sales or occupancy levels. Cost per occupancy room. Forecasted room sales. The room sales for the year are forecasted by the front office manager. The monthly breakups are also outlined in the forecast. This information is given to the heads of departments far in advance for the preparation of departmental budgets. Cost per occupancy room. The executive housekeeper prepare the cost per occupied room based on historical data. The formula used to calculate cost per occupied room equals operating expenses divided by room sales. Operating cost can be variable operating cost, semi-variable operating cost, fixed operating cost. Operating costs. Variable operating expenses fluctuate with the occupancy level. The costs that increase or decrease in proportion to occupancy levels. Examples are guest supplies, laundry. Semi-variable operating expenses fluctuate partly with the occupancy level. Employees in the department cannot be hired or fired according to daily occupancy fluctuations. A minimum number of employees have to be on the rolls. Examples are cleaning supplies, flowers, linen, and uniforms. Fixed operating expenses. Pest control is on contract, expenses is deducted on a monthly basis and does not depend on occupancy. In general, housekeeping expenses fluctuate based on occupancy. Every operating expenses needs to be planned individually. Once the executive housekeeper knows the predicted occupancy levels, the expected expenses for salary, wages, cleaning supplies, guest supplies, laundry, and other areas can be determined on the basis of the formula. Housekeeping expenses. Operating expenses are salaries and wages, employee benefits, contract services, operating supplies, linen, uniforms, laundry and dry cleaning, pest control, flowers and horticultural expenses, and miscellaneous expenses. Capital expenses are Equipment and machines. Furniture and fixtures. The executive housekeeper have to calculate each expenses individually. Thank you.